Audible now. I'm sure I'm audible now. So if you can hear me, kindly just comment or send a thumbs up. So I hope now we are good to go. I hope we are good to go. We can proceed now. There is so much. So I guess now we can now proceed. Can see now we are audible. So I was saying that today we are not going to discuss about the derivative trading or if you are on the social media platforms, I hope you have gotten to see all the two websites. You can use it. You can use them. So I hope now we are good. If we are good, just show with a comment so that we can now proceed. I guess everyone now is hearing us or is hearing what I'm saying. So I hope things are now. In case you have any questions there be any questions, just let me know. So in the comment section, just let me know so that we can get started. So I was talking about, I want us to talk about the Forex market, specifically that one only. So first I was saying that the Forex meaning, it means that it's foreign exchange, and that means trading in pairs and always has two currency pairs. So if you want to trade, there must be a currency pair. That's why you get like if you are in the trading view, so you can open also your trading view if you have a desktop on your side. So you only have always to trade always two currencies. So at one point you have to buy one currency while selling the other currency. So when we are doing like this one, it's gold and then there is USD, which is the US dollar. And just to mention some quick facts, it is said that 6.6 trillion. So it's usually said that 6.6 trillion dollars. So 6.6 trillion dollars is traded daily, and this is the largest market in the world, what we call the Forex market. So remember, this is very different from derivative, because when we talk about derivative, this is something just that copies the Forex manner. So when we talk about Forex, this is the real market. This one just does what we call something we call it is just a copy of what happens on the Forex side. So that's why you'll get that when it comes to derivative, we can trade 24/7. But when it comes to the Forex market, it's only open for 24 hours a day and only 5 days a week, Monday to Friday. So I hope you have come across to that. So it's only traded from Monday to Friday. That's why you'll never see the market moving from Saturday to Sunday, like the derivative side. You'll get us trading on derivative 24/7. It doesn't matter the period or the duration that we are trading. But here there is some limited 5 days a week. So we trade anywhere as long as all you need is the internet. So as long as you have internet, you can trade anywhere from anywhere. And simply this is what I want to start with when we are talking about this trading Forex. First, we need to know that we need to understand, one, those people you see entering so many entries, because I'm talking all this because we will be creating what we call the trading robots that are being sold. So that is why I need to start from somewhere, and you expect to understand deeper. I want you to understand deeper what it means when it comes to trading. I'm sure anyone here at the live trading right now understands what you can see on the picture. These are candlesticks, and we normally have candlesticks which are either, if we talk about green or blue, that is bullish candlesticks. Then we have the red candlesticks or black, especially most of the time. That the red candlestick represents the sellers or the sellers, or what we call selling candlesticks. So this one is the bullish and bearish. So the sellers are called the bearish candlesticks, which are comprised of the sellers. So if you want to sell, you need to know that you'll see red candlesticks. But if you want to buy, you need to see that you are going to be seeing green candlesticks, like this trading view of mine here. So I hope everyone understands that. I'm very pretty sure that everyone understands that who is here on the live session. So today I want us just to understand deeper when it comes to the Forex market. And in case I'll move on and you have not understood anywhere, you'll just let me know on the comment section using any questions that you will have. So I want just to go directly. So to anyone who has understood the Forex side but has not gotten to actually do like the practical thing, because I want to start with one thing, which is we will start with only one candlestick. We talk about only one candlestick. So first, let me talk about this candlestick. We are going to be talking like we are in the 4-hour candlestick. So you can see this is 4 hours. You can choose any time frame from this point here if you have the trading view. So we are only going to talk about one candlestick. So let's just do this. So I want to talk about candlesticks. By the end, everyone will have understood everything that I want you to understand. So today, let me zoom out. So as I've said, this is the 4-hour candlestick. So from you can see where I've chosen the 4 hours. So these 4 hours candlestick, I want us specifically to just look at one candlestick here. So let's choose the rectangle so that I show you the shapes. So I want to talk about only this candlestick here. Then that is what I want us to talk about, only that. And I'm sure everyone will already have understood by the end we are done talking about that candlestick. So number one, if you observe this candlestick here, this longer candlestick has things we call wicks or tails, and it's a bearish candlestick, as we have said. It's for selling. It's red in color, and you can see there is a wick or a tail up, and then a wick or a tail down, and there is the body which is in red in color. So basically, we have already known that sellers usually have red in color candlestick. Then we have green, that is the bullish, but we are not discussing that because I want us to understand perfectly on what happens in the Forex side. So basically, now I want to show you how listening into signals is so difficult, so that you understand. You need first to have the knowledge when it comes to trading Forex. Before you do anything, you need to have that knowledge about. So I want you to be very serious. So if you have somewhere to note, let's begin with only one candlestick. So we are going to be using a 4-hour candlestick and a 1-minute candlestick. So that is the 4-hour candlestick. Let me click on the 1-minute candlestick. So already that has moved. It was past some hours there. If you just zoom out, you will be able, don't know whether it's so far, you'll be able to see that that just when you try to move these sides. But let's just do with one here. So I want us to check one here, which is a bit bigger. So let's use like this one, which is a bigger candlestick here. So if you check like this, mostly it was time during the news. So this is 1 minute now, the same candlestick, but now it's a candlestick, but under 1 minute. So let's talk about this. So I will begin with 1 minute. As long as you have understood that one was 4 hours, we will get back there. We have now 1 minute candlestick. So I want to talk about this specific 1 minute candlestick. So basically, between you, if you are told that if you enter a trade like of a buy trade, like you entered from this price here, and then you have exited as long as this candlestick closed. So how much would you have earned only with one candlestick? Those are the questions we need to ask ourselves. How much would you have earned using one candlestick, so that you understand when to take entries using any signals you are given. So basically you need to know one that when it comes to a candlestick, we have things there is something we call the OC. So let me look the brush here. So there is something we call the OHLC. So the this means this is what all comprises when we talk about a candlestick. So that is the first thing you need to know. The initials are OHLC. So with this OHLC stands for, I know most of you understand what I'm trying to get, and of course you can see the OHLC at this exact spot here. So we normally have this one. To begin with this one, the O stands for open, and then the H stands for high, and then the L stands for low, then the C stands for close. So when we start with the O is the price where the candlestick started when the time period or the candlestick began. So if we talk about like this, let's first discuss about one candlestick where it opened and closed so you understand. So basically I want us to know completely. By the end of this session, you'll understand the whole thing we call about Forex. So let's first forget about this one. Let's use this candlestick which has wicks up and down. So you can see a small tail up and then a small tail down. So when we talk about bullish, it opened at this edge here. There. Have you seen where I've marked? Let me zoom out here so that any person can understand well. So allow me to scroll sideways. So perfect. Then let's use this as the example because it has what? Both sides. There is tails or wicks. So this is the wick and this is the wick. This is the body you normally hear. So that is the candlestick itself. So from here, I want us to talk about this. So this candlestick, because it was going up, that is the bullish movement. It opened from here, so that is the O. And the O, we have said, this is the price where the candlestick started when the period of time began. Therefore, if you want to know the price here, you can let's assume here, if we draw a horizontal line here, then go to the end, you can see we have 5076.550. That is where that candlestick, we are assuming now this market has not moved. It's the time it's forming here. So it has opened here, and that is the O. So it opened at 5076.550, and it's the same thing here. You can see, like here, it shows the OHLC, but I want us to see where it opened. So if I press here, you can see the color changes to green. You can see it opened at 5076.7570. Look here. I want you to look here because when I press the cursor on the candlestick, it's reflecting here. You'll now able to see the exact point it began. So the open, let me place the cursor here. So you can see it opened at 5076.50. That is the same, almost same price. So after it opened, there is now the price it went, which we call now the low. So this candlestick opened like this. We assume here this is the price it has opened. Instead now of going up, it went down. So let me show you what happened. So we assume, let's just remove first everything. So this is the price we have said it opened. So it opens at that place. Instead of going up, because it was bullish, it first went down. creating a wick or a tail, then went up. So this price it reached here, the below part, that is called what we call L or low. You understand? So that is the lowest point of the price where it touched, moving down. Now that is the lowest point that it went. Then if we go up, so after here it went, it started here, went down, then went up, then this is the peak. It went, this is the peak, which is the highest point, then went back, closed. So this becomes C. So I hope you have understood, or should I repeat again? So let's look here. So this is the cross, that's where the cross was, and this was where it began, and these are the wicks. So we have the high and the low, that is the peak point and the lowest point. And the lowest point is the place where it touched before moving back up. So the cross, already we have already talked about. The cross is at this exact point. This is the final place where the candlestick finished, and that is the point. Now after it closed, it jumped into the next candlestick here. So here was the point that this candlestick again opened, then went down, then created a low, then went up, then created the highest peak, then went down and closed. So again, when we shift to this one, it went, opened, then went down, then went up, then went down, it closed. If we come here again, you can see here, it opened, went down, then went up, then went down. You can see this, how it is so big. You can see this point here. You can see this exact point. The candlestick opened, went down a very small tail or a wick, then went up a very long wick, then went down, closed. We call this the tail or the wick. I hope now every beginner has understood how the candlestick moves. That is the bullish candlestick. And then from here, this is where it, I've said it opened, went down, then went up, created at the weekend, closed. The next candlestick just moves the same. So you can see it opened at this price. Now we are going down. So what does that mean? It will go up, create that week, then go down. This now becomes its the highest point, or the highest point of the bearish side, and then went there at that point, closed. Then we entered this candlestick. The first point you can see, despite that it doesn't show there that it went high, it went up then went down, it will still show the low point because it's hidden, but it was very small. Though, so it opened. Let's assume it went up, but at a very small up direction, which we cannot see. Then went down, then went up, closed. Then again opened, went up, then went down, then closed. Then again open this candlestick, then go up, go down, then go up, then close because it's bullish. I hope I've explained that with the perfect explanation ever. Someone who doesn't know between the candlesticks will now able to understand completely that. So that's the first thing someone would want to know. In case there is any questions, kindly do what? Just comment below so that we can proceed. So that is how you open or the candlestick behaves. So we want now to understand that already we have already talked about the green and the red candlestick. So the bullish is represented by the red, the green, and then the bearish is represented by the red candlestick, meaning the price crossed lower, and that is why it's called a bullish candlestick. So now from here, I won't need any question. Any question you need, there is so much rain outside, so just bear with me. So if there is no question, we can proceed. So, so we can proceed from where we have stopped. and we talk about, now we have already known how candlesticks open and close, all that we have talked about. Now let's get now to the calculation of pips. So when we talk about pips, we have so different. When we come to derive, it has a specific calculation of pips. So I'll only start with gold only, so that not to confuse anyone who is a beginner. They are outside. So when we talk about now the forex side, the pip calculation, I want you to look at these prices here at the corner here. You can see like here we have 15 or 9 point something. So how do you calculate the pips? You use the open, the OHLC. So like here, I want us to calculate like this. Let's choose now. This is 1 minute. Let's choose only one candlestick. This one, that one that I've surrounded, I've circled there. I mean, so this one is the candlestick. So, so that we don't confuse anyone, this is the candlestick. That that one. That is what I want us to do. So what we will do, we will look at it at the same thing. So when I click or just put the cursor here, you can see the open was at 5088.010. Let's write that. So that is the open of that candlestick. So let's do that one. So the open was 5080. No, it was not 58. Let's press again. 5088. 5088 point. Let me see again. 5088.010. 0.010. So that was the open. Let's now get to the second one, which is the H, that is the highest point. And we have already said where. So we opened at this point here. This was 88.010. So from there it went down. That is the low, and the low we are still going to get it. But first, let's go to the highest point it went, being shown here. So when I click here, we can see it went for 51.50. So let's add that. That is the highest point, highest point, or stroke. I call it the peak. Let's call it the peak. So we went at, let's see, we went at 5097. Let's see, 5097. So point 5097 point 250. So that was the peak. That was the highest point here. You can see where I'm pointing at this exact spot, this one. So that was the highest point. We have already known the open was that point, the highest. So now we are going to the low. The lowest point is this point here. I hope everyone is understanding what I'm doing. So the lowest point, let's pick that, and then we put here. So the lowest point, we can see it's 5086. So low. So 5086. 5086.835. That is the lowest point. So let's click here, let's press there. So 86.835. Then we go to this, the last one, which is the cross. And the cross, you already know where is the cross. The cross is here, that point. So it crossed at that point. So after crossing, it gave us 1596. So 1596. So that's the highest point. Close, I mean. Close, that is 5085. Let's see. That is 1596. 1596.390. So you have already understood. We have already seen every everything here. Let's move this one. Let's move this one here, and also let's move also this one here so that you can see. So we have the open, the close, the highest point, the lowest point. So we want to know the number of pips this candlestick moved. So this will help you to understand any signal given at any point. So that's why I'm doing this for a beginner. So in trading gold, 1 pip of a movement of 0.01 as the second decimal point. So how do we calculate? We normally pick the biggest, or we normally pick the open price. So this one is the a bullish candlestick. So we have to pick the difference between the close minus the open. Then we multiply that, we divide that with the 0.01 so that we can get the pips. So open was 50, close was this one. So we need to do the calculation. That is, I don't know whether you have a calculator. So let me just open my calculator so fast here. So I'm going to put 5090. So I don't know whether you are going to be seeing this because I'm sharing one screen, but you can do the math. 1596 .390. So you can do that math calculation. So just a bit. So what you have to do is you pick this. So that one minus, you minus this now. You minus this. You minus what? The one which was the open. So the opposite will happen when you are doing the a bearish candlestick. So you minus this. So let's minus this. So here you should minus this one. So that is what you need to do. So first let's do this. So you can do that. You will tell me the results. Let me do that. So minus minus 5088.010. So what do you get? You get 8.38. So that is what you get, 8.38. So 8.38 is the answer. So let me count here. 8.38. So if you have counted that, that is the answer of this point here. So that 8.38 is what you need to divide. Now, this is the price move. So after you have subtracted and gotten the price difference, so now to get the total pips, so you'll have to divide this one. You'll just pick this, now divide by, you'll just pick this one, you divide by 0.01. So let's see. So it will give us how many pips? So 8.38 divided by 0.01 will give us 838, giving us 838 pips. So it will give us 838 pips. Therefore, now, if you hear someone who talking about these are the pips that this candlestick has moved. Only that candlestick only has given us 838 pips. So so what we do next is as after, I don't know whether you people have done the math. So let me just repeat on my end here again. I see with using a phone, because I see that candlestick has gone at least at least a bigger point. So just allow me to do the math. So minus, so that I can confirm to you that it is the exact thing. So just a bit. Okay, okay. So it's the same thing that I have seen. So that is it. So it's 838 pips. It's correct. So it's 838 pips. Now we are assuming if this person was using a lot size of 0.01, you understand? So when we come to gold, if it depends on the broker you are using. So people using like the side, we normally do that using some if it is a lot size, a micro lot size of 0.01, that means units in per gold is 100 once. Therefore, you will have to multiply now the number of pips times now the lot size. So like this one will give us, so like here you have to multiply, you will now pick the lot size. The lot size will give you the exact amount that you could have used. So if we multiply this amount, if we pick how much now to buy, if you had entered this candlestick only, so at the open and then at the close of this candlestick, so you entered here, then it has closed here. So if you entered a buy, that means you'll be on profit. Here is what you would have made on your the lot size. So if you had used this one, if you had used this number of pips, now you will divide this number of pips to what we call divide by 0.01. So I'm using that 0.01. So it will be back to 8.38 multiplied by 1. Therefore, you'll get 8 USD. So that candlestick just made that move. You'll have gotten 8 USD if you entered this candlestick using 0.01. So I don't know whether I've made sense there to someone. So if you entered this point and it closed at this point, exactly you would have gotten 8 USD. Also, it's represented on this price range there. So you can see also the pips how it's been calculated. Therefore, if you entered this exact spot, you'll have gotten that. So let's do some quick math because the trading is still moving on. Let's get to the one which is happening now. So let's check one which is happening now. So we are at 55 countdown. This is 55, 51. So you can see this one, what has happened. So let's do this. We wait for the next one and then we enter into a trade. One trade that we will see the outcome. So just we can use a demo account for illustration. So okay, don't know whether you are seeing the screen. Okay, don't know whether you are seeing and hope someone is seeing the screen. So I want to go and purchase one. Okay. Okay, I'll be showing you. Okay. Those people seeing a blank screen is because I want to purchase one and show you the exact thing which is happening. So we are going to enter using at least one market here, just to do some practicals. So allow me to let me see. Okay, back. So let me just try here. I want to show you practical so that you see that is what it means. So, okay, direct, it has entered. So okay, so let me share the screen now. Let me share that screen now. So so let's remove this. Then we add one. So let me remove that and Stop screen sharing. So let's present another thing here, screen sharing. So perfect. So we are here. I hope you can see the screen, all of you. So let's now get in here. So this is gold. This is gold on a demo account. So don't know whether you have reached at that point. Let me just wait for you guys if the screen has not shown. So let me just allow, okay, add to screen. So we'll just understand, because we have to show some people the correct thing. So perfect. I hope now the screen is being seen properly. Uh, I'm perfect. I'm very sure someone can see the screen. So okay, you can see one here. Let's do this one. Okay, don't know whether this one is being seen. Okay, let's remove this one. Let's put for the rev, which has a different leverage. So I don't know whether this one will be seen. Let's share the screen again. Just a bit. So you just have to be patient. So just be patient. Perfect. So perfect. So let me add to stage. So got it. So everything is good now, functioning. So those watching, I hope you can see the screen. So I hope you can see the screen now. And since you can see the screen, I hope now we can proceed. Let me proceed from where I have left. So we want to do this practically here. So first I need to change this. It's showing well. So there is a bot here which is trading. We need to remove it first. So we will get into executing using trades using bots. So but for now we just want to see using the candlestick. So this is XAU 1 M1. So I don't know whether the screen here will be able to be seen. So let's do some checks. So at 1 minute bar chart. So I just want to zoom in. So let's return to the candlestick. So I want us to look here. So you can see the open, I don't know, open, okay, high, low, close. It has not yet closed. So I hope you can see where my cursor is. We are looking at the current candlestick. So if you click, if I just click there, I'm able to see the open, high, also the date 2026, third of 2026 March 06, and the time. Then you can see how that candlestick has gone. Following this, it's I wish we had entered on this, but we need now to check. Let me check something we call the exact time. So I want to enter at the exact time on the as the trade the what we call the trading view. So you see the another candlestick has entered there. So what you'll just allow me to check here on my phone, so that we get in with using the trading view, so that you understand, so that you see where you get trapped while just using signals, and that time you have 100 USD, and with 100 USD you won't get something, because at that point you think you are making it, instead of first knowing, understanding the forex part completely well. So 18, you can see this is 18 seconds. Let me just now be setting my trade. So I'll go here with the new order. So market execution, this is 1 minute. Then I want us to start with the lowest, that is the smallest, that is, let's sell. That's the another candlestick. We have entered a trade. So we have solved that. I want you to see what happens now. For one candlestick, it is can almost go to around 3-4 candlestick, basically based on the size of the candlestick. So I want you to see by the end. I want us first we see at what time. So this one is 33 seconds. So I want us to close at the time it will end at the exact time, and then we go and check it on the trading view. So we are almost, you can see it's $1. Well, that's one candlestick going that way. So 19. So it is a bit smaller. It looks like it is going to be a doji candlestick, no problem. We are going to calculate the price, the open and the close. So you can see 0.6. So on my end, I'm looking at the current. So 0.6, I'm out of the market. So how much was that? So let's see. So we can see this is we can see this has given us some 0 point something, 0.06. It's a doji candlestick. Let's go and now calculate that using the current candlestick. So we have now to shift from here. You'll run this by checking what is happening. So we'll have to do this by force. So guys, you'll need to understand that we need to do this. So we go back now. We go back to watching that candlestick because already we know what is that candlestick. So let's just get it. Let's see. So I'm back here. So we are going to use that doji candlestick. So that doji candlestick is what we are going to check. So back. I don't know whether I'm still audible, but I hope I'm audible. So if I'm audible, you can just comment so that I hear whether I'm audible. So we are done. That's now good. We can proceed here. So you can see the candlestick. This is the candlestick. That was candlestick that 1934. What was the candlestick end here? That was let's see. So I was checking that candlestick. It was a doji candlestick. So that is what I want to see. Yeah, either this one or this one. That's why we have gotten a 0.06. So let's check this one. So if I press my candlestick here, we can see we have 51.37. So because we have gone down, we need to subtract what? We can see the OHLC of that candlestick. I told you when I press the candlestick here, you are able to, when I press the cursor, you will be able to see the exact OHLC. So at this candlestick, we want to see how much you would have made if it opened and closed. So open the open and the close. So we are going to take the close. That is 51.37.340. And then subtract what is the open, subtract now the close. That is what we need to do, but we are going to get 51.37.410. That is negative 0.07. Therefore, if you multiply by 0.01, and I mean you divide, not that is 0.07 divided by 0.01, you'll get then multiply. That is the same amount we got. That is 0.06. It's because we entered, and there is usually something we call the spread. That is another point to look later. So you can see the exact thing I wanted us to look is, you understand that a candlestick at times like this one, I'm pretty sure this one, which is now currently for me, this one is approximately more than 6 USD. So let's see how much it is. If you scroll there where it will close, it will have made almost 6. You can see 6.5. So around 6 something. And you can see it's still proceeding downwards. Therefore, if this is using only one candlestick, which can give you 6 USD, that is what I want to understand. So if this one can give you approximately that amount for only using a 0.01 lot size, are we together? Now we are calculating the amount. If this one is around, let's just give it roughly 6 USD, not 7, but 6 USD. Let's calculate that. So if all these calculations you do that 3, 6, that math, and this is using one minute, then you have something like remember the spreads. There's something we call the spreads. So there is a time you can enter a trade, and most of the time you'll always start with a negative because of the spreads on the broker. So let's leave that because they differ. But now the point here is I'm trying to talk about the signal. You have seen a signal, you have been told enter, and then you have a 50 USD account. Most of the time, if maybe you add like a lot size of 0.10, automatically you'll lose that amount account, because you must start with the spread. Then from the spread, it might go up and make such kind of wicks or tails, and that's where most of the retail traders fail from. So I wish we would have done one practical, you understand on what will happen. So the difference of you using a 0.01 and 0.10 and maybe something like one lot size, you'll understand the reason why. If I was to enter a trade like of 4 hours, let's now get back to the 4 hour point here. So let's now talk about like this candlestick here. If I was to enter like this candlestick, this one only, if I was to enter here, if I'm to ask someone how much did I need to enter a lot size of 0.01, how much would I have gotten? Like 0.01 lot size. So like here, I needed to enter 0.01 lot size for these 4 hours, the whole candlestick. If I was not to lose my account, I needed something like if I was to use only one lot size, one trade, only one, I needed something like 20 USD to make 118 or 100 plus USD. That is, if I entered here and then I did not cross when it reached at the lowest point, I waited for the candlestick to close. So I would have lost like something here, 84 something, $84, and then it would have closed here with 100. But in real sense, this whole candlestick was around something like 200 USD. That is if I used a lot size of 0.01. Are we together? And then there is something I talked about, the spread. The spread means I have entered at this point. Immediately I'll have a drawdown of like 9 USD if I'm using some brokers like I mean 0.9 USD if you are using a 0.01 lot size. So that is 0.9 USD lost. Immediately I enter a sell price. If I was had taken a sell direction, I would have a drawdown of 0.9 based on the broker that I'm using. Then from there, it would have gone up because we already talked about how this one is opening. It opens, goes up, then goes down. So if it opened here, then went up, I would now take this we call tail. I calculate that the pips and the amount that I would have gotten. So probably here, the pips here we can see it was around something to do with 12. So if it is 12 plus the other 0.9, approximately you would have gotten a drawdown of negative 16 or 14 there about. Then that is the drawdown, negative 14. Therefore, a 20 USD, a 30 USD or a 50 USD account could have sustained this move. So a 50 USD, that is only for these 4 hours. So you would have entered using a 0.01 dot size. After entering, you get into the market, it goes first at a drawdown. You first see a drawdown that is of negative 14 and above there. Then from there, it returns to your direction of the sell direction, goes all the way to 200 USD, but because you fail to cross at this point here, you wait for it to cross at this point, so you get 160. Also you can see there it shows 116 approximately. I'd said 118, 100. So you can see you'll have ended up with 100, but lost, it had reached 202, 201 there along. So you have lost around 80 USD because you have not crossed. So therefore, you can see that if you have 0 point, now let's now talk about 0.10 you lot size. If you have now don't if you don't have the knowledge that this lot size is big for your account, already the 50 USD would have been swept immediately. If the drawdown went just in this direction and you took a 0.01, already 50 USD was out. Even 100 USD would be, I guess, out, because if we calculate well, I am sure here you would have gotten a drawdown. So you needed something like 130 USD or 130, 140 there along. So someone can do practically the lot size of this candlestick. This is on 3rd March 2026 at 4 hour candlestick pro 13,002.5. So try that. Just go try calculate this one, the 13, which ended at 1300. So try this candlestick. Just calculate. Tell me how much you would have gotten if you are using 0.01010. If I was to trade here, I would have something like 160 USD, so that I manage a move, and then the result of this, that is one trade. We are talking of one trade only. So you enter here using 0.10. From here it goes down. If I calculate, or if I cross around this point, I would have made over 1,000 plus USD. That is using the lot size of 0.10. Then if you have if you are now using something a lot size of one one lot size, you had to have to your account balance around about 200 USD. So you have, so that 200 USD could have survived the, maybe let's say, 1300 drawdown before it took this move to hit to around $2,000. Are we together? That is using no, not $2,000, but $12,000. So here you would have made around 1200, to around 1200 if it crossed at this point, but more than if you cross at this point below. So you needed something to do with $2,000 only. This one. Same case. If now you do those months, if this is 4 hours, go to the 1 minute, calculate those moments. So in case you are given a signal by anyone, you need to do that math before you decide whether to do what? To enter a trade. You understand? Before you decide to enter a trade, first do that math on the lot size. Then from there you can decide whether you can enter the trade on that direction. So you just compare, is my capital going to be swept out if there is, in case there is, number one, the spread amount, and number two, in case there is the drawdown where it is creating the wick. So it's a good, nice session. Let's end it there. In case there is a question, you can always comment, ask questions. It might be confusing, but in case you need more clarification, just let me know where you have not understood. Maybe we are going to be doing the Forex side most of the time, so that you don't get confused when it comes to signals from other traders. And those traders you see may be putting like lot sizes of 0.1, 0.10, like 5 times. You need to calculate how much you need to make at that move, because most of the traders also, even if they are doing that swing trading, they only have like one trade, and they have done their math calculation. But if you are sure of the correct direction, you can always risk. So that is it. Let's meet in the next video. This is Trade Pro FX. Bye bye. In case you have any questions about those lot sizes and the calculation, exactly ask me, and I'm here to help you. Bye bye.